This is part 2 of the best Tradingview systems we've reviewed. Part 1 is linked in the description if you missed it. And now, here are the top 3. Created by Chris Moody, the Slingshot system operates as a dual EMA trend-following methodology designed to keep traders aligned with market momentum while providing entry timing. The core mechanism uses a 38-period fast EMA and 62-period slow EMA to establish trend direction, with the system generating signals based on price behavior relative to these moving averages during pullbacks. The methodology distinguishes between aggressive and conservative entry approaches. Aggressive entries trigger when price pulls back below the fast EMA during uptrends, or above during downtrends, serving as early alerts to potential reversals. Conservative entries require price to move back above the fast EMA after being below it the previous bar, confirming the pullback has ended and trend resumption is underway. This two-tier approach allows traders to either position early with higher risk or wait for confirmation with reduced risk. The system performs well during trending markets where directional bias exists, particularly in swing trading timeframes. The pullback mechanism captures natural retracements within established trends, providing entry points compared to chasing breakouts. The visual components, colored bars for pullbacks, trend triangles, and entry arrows, create a trading environment where trend direction and entry timing are apparent. The EMA fill between the two moving averages provides visual confirmation of trend strength and direction changes. Strategic implementation works by using aggressive signals as preparation alerts while taking action on conservative entries. Traders can scale into positions using both signals or filter trades by only taking conservative entries when they align with higher timeframe trends. The customizable display options allow adaptation to different trading styles. Scalpers might prefer the feedback of colored bars, while swing traders focus on the trend triangles for broader context. However, the system struggles in choppy sideways markets, where the EMAs frequently cross and generate false signals. The relatively short EMA periods make it susceptible to whipsaws during volatile consolidations. Price gaps can bypass the pullback mechanism entirely, causing missed opportunities or late entries. The lack of momentum or volume confirmation means traders might enter during weak trend resumption attempts that fail quickly. The Slingshot method capitalizes on trend continuation by identifying temporary pullbacks within established moves. This approach provides risk-reward ratios compared to breakout strategies while maintaining the simplicity of EMA-based trend identification. The dual signal approach provides flexibility while the visual clarity makes execution straightforward. Loses points for poor performance in choppy markets and lack of volatility adjustment. Common real-world conditions that limit practical application. Created by L and L Capital, this PineScript indicator combines ATR-based stop lines with multi-time frame trend analysis designed for intraday traders and scalpers. The system operates through two core components, a 13 EMA trend line and dynamic ATR deviation stop lines that adjust based on previous bar ATRs and price position relative to the moving average. The methodology centers around 5 distinct trend modes, ranging from tight settings for low volatility markets to FOMC mode, designed for high volatility environments. The net mode creates multiple ATR bands simultaneously, forming a layered stop system that accommodates scale-in, scale-out strategies. Each mode adjusts ATR multipliers from 60% to 140% of the 8-period EMA true range, creating progressively wider stop zones. The system performs well during trending market sessions where directional bias exists. Traders can identify entries when price holds above the stop line during uptrends. The higher timeframe component provides context filtering. When both timeframes align, trade conviction increases. The DMI-based bar coloring helps identify when ADX exceeds 20, confirming trending conditions versus choppy consolidation. Strategic implementation works by matching trend modes to market conditions. The automatic higher timeframe selection pairs chart periods. 1-minute charts get 5-minute HTF context, while 15-minute charts reference 4-hour trends. However, the system generates whipsaws during sideways markets when ADX remains below 20. The multiple stop lines in net mode can create analysis paralysis rather than clarity. Fast-moving news events can cause price to gap through all ATR bands simultaneously, invalidating the stop logic. It performs well for active traders due to volatility-adaptive ATR bands and higher time frame integration. The multiple modes, tight normal FOMC, allow real-time adjustment to market conditions, useful for intraday trading. However, the complexity requires experience to implement effectively, and the system demands constant monitoring, limiting appeal for part-time traders. Created by Zierman, this Pine script indicator transforms intraday charts into hourly session-based trading environments through dynamic open-level tracking, retest identification, and multi-time frame context integration. The system operates by plotting 1-hour and 4-hour opening prices as either lines or zones, while simultaneously tracking price behavior around these levels to identify reversal and continuation setups. The core methodology centers on hourly session opens as support and resistance levels, with the system automatically drawing these levels at each hour and 4-hour interval. The zone feature creates price bands around opens, using percentage-based deviations, providing flexibility for different volatility environments. The retest mechanism identifies when price returns to these levels after initial rejection, marking potential entry points with triangle markers. Volume filtering ensures only retests with above-average participation are highlighted, reducing noise in choppy conditions. The system performs well during active trading sessions, where institutional activity creates respect for hourly opens. The retest functionality captures support resistance dynamics, as algorithmic traders and institutions often defend or challenge these levels. The higher time frame candle display provides context for trend direction, while the hourly average line helps identify whether current price is above or below the session mean. The percentage change table offers performance metrics across multiple time frames, enabling assessment of momentum alignment. Strategic implementation works best on 1 to 5 minute timeframes, where the hourly structure provides meaningful support resistance context. Traders can use zone width adjustments to accommodate different asset volatilities. The retest counter prevents overtrading by limiting signals per session, while volume filtering adds confluence for entry timing. However, the system becomes unreliable during low-volume periods, when hourly opens lack institutional significance. Weekend cryptocurrency markets or holiday sessions often produce false signals as participation drops. The multiple visual elements can create information overload for newer traders. Strong performer for practical application. Time-based levels align with institutional trading patterns. Retest logic captures market behavior, and the system adapts to different volatility environments. The multi-time frame context reduces directional errors, while volume filtering reduces false signals. It works consistently across Forex, equities, and crypto because institutional activity respects hourly opens universally. If you're interested in trading strategy backtesting and analytics, check out our backtesting software review, where we tested and compared multiple strategies with detailed performance analysis.